interesting edition of the Market Review where we discuss key developments in the financial and capital market as they affect the economy. Today we'll be bringing your way a market perspective on the recent big story from last week. Our focus will be the flour mills acquisition of Honeywell, implications for Nigerian capital markets. I had a conversation with my guest, Mr. Olutoyin Ayoade, on the sidelines of the recent Economic Associates 4th Nigeria Economic Outlook Conference in Lagos. Mr. Olutoyin Ayoade is the MD of MBC Securities Limited. But before we begin the conversation, let us give you a wrap of key developments that occurred in the market last week. Flour Mills of Nigeria Limited and Honeywell Group announced last week that they have signed an agreement for the proposed combination of FMN through its affiliates and Honeywell Flour Mills PLC, a portfolio company of SGL. At a total enterprise value of 80 billion naira, SGL will dispose of a 71.69% stake in HFMP to FMN. The proposed transaction will combine two businesses with shared goals and create a more resilient national champion in the Nigerian foods industry, ensuring long-term job creation and preservation. According to the Nigerian Exchange Limited, a combination of FMN and HFMP will bring together two trusted and iconic brands. Also last week, the Securities and Exchange Commission led the drive for financial literacy as it rang the bell on the Nigeria Exchange Group digital closing gong platform in commemoration of the World Investor Week 2021. In delivering the opening remarks, the division head, listing business NGX, stated, Nigeria is pleased to join the apex regulator of the Nigerian capital market, the SEC, and all security exchanges in Nigeria to ring the bell for financial literacy in honor of SEC's commemoration of 2021 World Investor Week. Financial literacy and inclusion remain a top priority for Nigeria Exchange Limited. We go on a break, and when we return, we will continue with the conversation.
The ProShare mobile app, your non-stop access to financial and economic information. With the ProShare app, you can customize your preferred news and videos. You can also get access to latest financial and economic news. Watch videos related to business, economy, financial markets, and lots more. The ProShare app gives you in-depth market stats from the NSE, FMDQ, and NASD. That's not all. You also get real-time alerts. The ProShare mobile app. Information at your pace and in your space.
Welcome back, and if you're joining us, it is the Market Review, and my conversation today is with Mr. Olutoyin Ayoade, MD CEO of MBC Securities Limited. I had this conversation on the sidelines of the Economic Associates 4th Conference on Nigeria Economy Outlook. I first asked him his perspective on the deal between Flour Mills and Honeywell. Here's what he had to say.
Well, what we are seeing is a merger of two companies that basically operate in the same space, which is the flour milling industry. We think that it's going to result in synergies for the merged entities, in which case they'll be able to reduce cost of production and administrative costs as well. So over time, we expect that that will result in better performance for Flour Mills Nigeria PLC.
Last week also, Ecobank issued a statement concerning the transaction and why they felt it should not be consummated because of outstanding issues it has with Honeywell Flour Mills Limited. This is Mr. Ayoade's response to that development.
I think that what we're seeing is normal. Every company has some debt on its balance sheet, so it is not out of the ordinary that Honeywell Flour Mills has some debt on its balance sheet. However, the way it is managed and how well it is managed is a totally different matter. Now we have a sort of controversy between Ecobank coming into the merger agreements between Flour Mills and Honeywell, and they actually are highlighting their own interest in the deal, which is the debt that is owed to Ecobank by Honeywell. It is, like I said, it is natural. The way it is, this issue is resolved between the three parties is what will determine the long-term outcome of this merger that we have seen. I believe that over the next coming weeks, we are going to see a situation where the three parties will actually sit down to say how they're going to resolve this matter. So I don't think we have seen the end of the deal yet. I think that the interest of Ecobank will eventually be taken care of in this matter. Now, how does it affect the market? The way it affects the market is that the expectation of the conclusion of the deal might take longer than we expect. So the deal that was announced may not be concluded until sometime in 2022, and not this year as was earlier envisaged.
Now, how will this significant M&A impact the Nigerian financial and capital market? Get his market expert's response.
The issue of investor protection, I think, is already taken care of by the regulators. I think that the Securities and Exchange Commission has already given an approval for this transaction. So that's been taken care of already. Now, what has happened in the last 1 week, where Ecobank came out to announce their interest, like I said earlier, will only take more time for the transaction to conclude. But I don't think that there are any issues about investor protection. There aren't any serious risks there to other investors in both companies.
Also, I was concerned about the issue of investor protection, and I asked the MDC of MBC Securities Limited if the regulators will guarantee that in the wake of this deal.
Okay, well, for one thing, we want to see companies that are more efficient on the market, that will provide or produce enhanced returns to investors over time. So it's a good thing for us to see two companies that are in the same business coming together to improve their performance by way of a merger. So we'd like to see more of this in the market. We'd like to see superior returns on investments to investors. So we think it's a good thing. Now, talking about mergers that we have seen in the past, like the Access Bank, Diamond Bank that you mentioned, well, we saw a bank that was weak and the stronger bank taking over a weak bank. I think it's a similar situation we actually have here. And I think that the result is going to be the same. We're going to have a stronger company with superior returns and, of course, more efficient operations.
It all goes down as one of the biggest M&As in Nigeria's history. But what are the prospects for the business environment and the economy through this deal?
Well, I think that we've more or less gotten to we're getting towards the end of the COVID crisis, and we have seen that most companies actually settling down from middle of the year till now. Most companies have been settling down, and we have seen 3 quarters of reports from most companies, and they have not done particularly badly. Most companies have actually improved on their performance last year. And we think that the COVID-19 actually created more opportunities for companies in particular sectors such as telecoms, food and beverages, and so on. And we have seen their Q3 performance. A lot of them have performed handsomely well compared to what they did last year. So we expect that towards the end of the year, investors will position for the opportunity of dividend, which will likely come in at the end of the first quarter of next year. So we expect most companies to release their results before the end of March next year. And we expect that a lot of investors will position themselves for this dividend that will, as we expect, will lead to a mild rally in the market. So we expect asset prices to go up further towards the end of December and into January and February next year, when most of the results will start coming out. And then we have a very good idea of what dividends will be paid to investors. Also, there are a few assets that are mispriced in the market that are still priced below their intrinsic value. We think that investors will take opportunities in these stocks and that will also boost a rally in the market.
We're in the last month of the year, 2021, very eventful. I asked the market stakeholder to share his perspective on how activities have panned out and his word to investors.
Yes, I am optimizing, commercializing, and financializing public assets is something that depends on public policy, depends on government policy, and of course depends on the speed and willingness of the government to carry out some of these privatization and commercialization processes. We've seen announcements about the NNPC. We don't have a clear-cut plan yet. So a clear-cut plan and timelines will actually be very good for investors to know what the opportunities are and how they can position to take advantage of those opportunities. So it still boils down to government. Government is the owner of most of those public assets, so they can decide at what time they want to commercialize or make them better financial assets.
We will continue to monitor developments from the Flour Mills Nigeria PLC 80 billion naira acquisition of the majority stake in Honeywell as they come. We promise you that. And that'll be all for this edition of the Market Review Show. If you have questions, comments, or suggestions on the Flour Mills acquisition of Honeywell stake, implications for Nigerian's capital market, please send them to otobasido@prochange.com. We're glad to receive them and respond to you. Also follow our website, www.prochange.com, to read our latest news articles, stories, and reports on the capital market, particularly this latest development. We have them all covered for you. You can also engage us on our social media platforms displayed on the screen. Don't forget that you need to be informed to make the right investment decisions. Thank you for watching, and keep discussing the financial and capital markets because they create wealth and economic opportunities.